Hey guys, it's DD. Welcome back. Okay, today we're going to talk about funded accounts. Now, we have two questions. Number one, what is a funded account? And number two, how do I choose a funded account? So let's go to this presentation I made over here. So, what is a funded account? A funded account is when a trader signs up with a company that funds his trading account with an initial amount. Say they give him $10,000. Sharing the profits with the trader and also taking total financial responsibility for the trader's losses. So they're giving you, let's say, $10,000 and they're sharing the profits with you, let's say 50-50. So if you make $100, you get $50 and they get $50. And not only that, they are covering all the losses. Since it's not your money, you're not responsible to pay for the losses. That's not it. The company will then increase the funds each time a trader shows certain positive results for his or her trading. So those are called milestones. Now, let's say you make 5% profit on your $10,000 account. So if you reach that point, the company might say to you, wow, DD, you're doing great. I'm going to give you now $15,000 to trade with. And so on. It goes higher and higher, sometimes into the millions. So that is what a funded account is. So obviously it's really cool. Let's see what the pros and cons are about it. So obviously there could be a lot of pros and cons, but I think the main pros and cons are as follows. Number one, you can make more profit trading with a bigger position. So a lot of traders, are starting off and they're seeing that they're doing well in their trading and being consistently profitable. But they're starting off with a $500 account, $1,000, even a $5,000 account. And it takes time to build that up until you could be taking money from your account and, making a living off of this. But if you're trading with a $20,000, $50,000, $100,000 account, boom, you're starting to make big profits now. And that's the way to go. So obviously that's the biggest pro. Second is, like we said, you're not risking your own money. You're not liable for the losses. So that's awesome too. Now, a con is that you have to split the money with the company. That's not fun, but it is their money. Okay, so I did a lot of research here and I went through 14 different funded accounts for you guys. And I'm going to talk a little bit about them and the differences with them. So this way I could help you choose which funded account to go with. So this second one over here on the top, FTMO, that is like become a really popular funded account. It's almost become like the funded account. Like, do you have an FTMO account? But that's not the only one out there. I actually signed up with the Fivers, so I kind of like them, and I'll tell you about that later. So we have the Fivers, FTMO, Click Funders, Traders, Central Fund, Learn to Trade, a lot of different ones. Let's get into it. So how does a trader know which funded account to choose? So I kind of broke it down to three things. The first one is two-pronged. Now, how much of your own money are you willing to risk to sign up with a funded account? And how fast do you want to be funded? So, unfortunately, not all of these funded accounts are free. Most of them require you to pay a one-time fee. Some of them have a monthly membership. And a lot of them have an evaluation process, which could take 30 days, it could take 90 days, and it could take even longer. So if you're really strapped for cash and you don't have, let's say, $250, $500, 600 euros, something to pay the one-time fee, then you're going to want to go with a different funded account that doesn't require a fee. Or if you just want to trade with big money right away and you don't want to prove yourself, you don't want to be under the pressure, you want to get your mindset ready and your psychology of your trading ready to trade with a funded account right away with big money, and you don't want to have that evaluation process, so then you want to go with those one-time fees. So that's the first part. Two is, how much do you want to share with the company that's funding your account? There's different amounts. Some of them have 50%, and I've seen even up to 85%. And finally, one of the big factors in determining which company to use to fund your account is what's your trading style? How do you like to trade? And we'll get into that. So let's get into all these three things. First, how much of your money are you willing to risk to sign up, and how fast do you want to be funded? So it basically boils down to four different ways. FTMO and many others require you to pay a one-time refundable fee. We'll explain why it's refundable. And then you go through an evaluation period where you can prove that you're profitable. Some companies, like let's say FTMO, has a 2-stage, I think it's 90-day evaluation period, and you pay a one-time fee. It's refundable because if you start to make profit, they'll give you back that money in the profit. But if you don't make profit, then you lose that money. So most funded accounts work like that. You pay the fee, and then you got to prove yourself as a trader. Now, I saw Enfoid, Enfoid.com, they have an evaluation period, but they don't have a fee. So if you're an awesome trader, but you don't have any money, which sounds kind of weird. Like, if you're an awesome trader, why don't you have any money? Maybe you just have big spending habits. Okay, but if you're an awesome trader and you think you could prove yourself, but you don't have enough money for a fee, then you could go with them. The third one, which is the one that I use, is the Fivers. And it's unique in that you pay a one-time fee and you're funded right away and you don't have to prove yourself at all. And then finally, I saw the Trader Central Fund. They have an option where you could pay monthly and get funded instantly. You don't have to prove yourself. You just pay monthly. So my question is, why would you ever do that? Why would you pay monthly to be funded when you could pay a one-time fee with the Fivers and be funded? So those are the 4 different options. And that's part number 1. How much you willing to risk and how fast you want to be funded. You want to be funded instantly, you want to wait 90 days or whatever to go through that evaluation period. 2 is, what percentage are you willing to share with the company that funds your account? Sorry, we do have to share money with the company. So most proprietary funded accounts split with you 50-50, as does the Fivers that I use. I saw 55-60 in a few. FTMO, the big one, they give you 70% of your earnings, and they take only 30%, as does the Trader Central Fund. I saw that the prop trading, an Australian company, will split 80-20. They'll give you 80%. And then my Forex funds will give you 85%. But obviously, these all come with strings attached. In other words, there's different rules for my Forex funds and the prop trading. How much are you allowed to lose in a trade? How much are you allowed to lose overall? These are very involved, and you got to look into it. But one important thing is, like, how much do you want to, bottom line, how much do you want to share with the company? So we have how fast do you want to be funded, how much do you want to pay to sign up, and what percentage are you willing to risk, what percentage are you willing to share with the account. Finally, what's your trading method? Like, first of all, are you aggressive or are you a conservative trader? That depends. Like I said, the drawdown limits are different in these different funded accounts. I do have to say that a lot of them will be acceptable for you because they have like an aggressive way or a conservative way. But you got to be careful when you choose which program you want to go with. Are you going to say, I want to use an aggressive trader? Then you start trading and you're risking 5% per trade. They might shut you down right away. So you gotta be careful when you choose that. 2, are you a day trader or are you a swing trader? Meaning, do you hold your positions overnight? Some funded accounts don't allow that. Do you hold your positions over the weekend? Some funded accounts don't allow that. So that's something to definitely look out for. And finally, do you trade like the news events? Some funded accounts will not allow you to trade within 5 minutes before or after a big news event. So if that's your method, you better be careful before you sign up. Okay, so I just want to point out these 5 different unique funded programs. First of all, the one over there in the middle, the Fivers, that's the one I went with. Why did I go with the Fivers? It cost me $875 to get a $20,000 funded account. Now, I had that $875 and I want to trade with the big money because to me, my mindset and my trading with psychology is very important. And I want to get used to trading with bigger money. So I just paid the $875. They only allowed me to lose at this point 4%, which is $800. And, if I lose it, so then I lose it. And they make $75, but I'm trading with big money right away. So that was something that's important to me. If you look at the top on the left, you'll see Enfoid, we spoke about that before. They do not charge you a fee, and they just evaluate you. So if you're strapped for money and you just want to be evaluated, that's a good one for you. The Complete Currency Trader, that's kind of like getting a job with them because they don't even evaluate you going forward. They look at like your statements, how you've been doing over the past 6 months, and what's your risk of ruin, and what's your risk per trade. So they're kind of like looking to see how you've been as a trader before, and then they're going to fund your account. That's kind of like the old way they used to fund accounts. Let's go down to the bottom left, quantum trading education. So that's interesting because that's like a course that you take. They have their own indicators, they have their own program, and then if you trade like them and you start to make money, they have an option to fund you. And then all the way on the top right was funding talent. This was kind of weird because what they do at first is they give you 10% what they call a funding talent bonus. So you're only making 10%, as opposed to 50% of your earnings. But they take 5% of what you made and they put it aside until you earned 15% of the account. And then they allow you to trade with 75% returns on your investment. So it's kind of like they hold your money for a little bit until you could really prove yourself without proving yourself, because they're giving you money the whole time, but they're not giving you all the money. It's an interesting way of looking at it. So, guys, this is basically, the different ways to understand funded accounts, which I think is a booming business right now, and it's a really cool option for you guys. I did it. I think it's really cool to get into it, and I hope I was able to help you decide, which kind of funded account you want to get, and hopefully we'll all get these funded accounts and start really raking it in. All right, guys, DD out.